In one corner, CBS. In the other, Time Warner Cable. The smackdown continues. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Just another manic Monday on Wall Street. The Dow Index being weighed down by oil giants Chevron and ExxonMobil. Maybe things will pick up tomorrow when Disney reports in the afternoon. Joining me in studio today, Andy Cross, Jason Moser. Guys, our top story. Time Warner Cable has nearly 3 million subscribers in New York City, Los Angeles, and Dallas. And on Friday afternoon, CBS went dark for each and every one of them. That's because CBS and Time Warner Cable have been unable to reach a new agreement on terms for retransmission fees. Andy, around 2 o'clock today, word broke that Time Warner had made a new proposal to CBS, but at least in the short term, it seems like a little bit of a lose-lose, but someone's got to win this, and this has got to get solved quickly. We've got football season coming up.
Yeah, well, that's actually a very important point to make, Chris. I mean, these are two $30 billion organizations going head-to-head. CBS has some wonderful properties. They're the number one network on TV. Plus, they have football. They have the Masters. They have the NCAA football or basketball down the line. They have to get this resolved. I think CBS is in the driver's seat here, and so I'd much want to be on CBS's side than Time Warner's side if I am a shareholder, of which I'm not, but I would want to be on CBS's side, not Time Warner's.
Is this a sneak preview of coming attractions? Are we going to see more content providers willing to do battle with cable companies because content is king, and to Andy's point, they're in the driver's seat?
Yeah, I mean, I believe that content is king, and I think Andy made a lot of good points there with all of the sports offerings that CBS has to offer up. And let's not forget the PGA Championship is this week, and the third and fourth rounds will be played Saturday, Sunday on CBS. So there are probably going to be a lot of people not getting that, and they would not be very happy. I was reading stories about guys propping up antennas so they could just watch the last round of the golf tournament or whatever sporting event was on TV. And I don't know that that's going to fly for very long, but it's basically, this is just a fundamental disagreement on what CBS thinks it should get versus what Time Warner thinks it should give them, and they're going to have to figure out a way to meet in the middle, because if they don't, then I think they both end up losing.
If the content providers are in the driver's seat, does that mean Time Warner Cable is a stock that you want no part of?
Yeah, I don't. Well, I own Comcast. I think Comcast is better positioned. I think they've done better with their programming with NBC Universal. I think that's a better stock to own, of which I do. I think really that this is like a Netflix. I still think, I think Jason's right. The content's key here. That to me is things like Netflix, DreamWorks, Scripps Networks, and Discovery. All of those, I think, are in the best position to win in this content battle over the next decade.
All right, let's get to some of the day's movers and shakers. Berkshire Hathaway's second quarter profits rose 46%, which apparently was not a big surprise to most observers because the stock only up slightly. Are they starting to be a victim of their own success?
I think to a degree, yeah. I mean, Buffett and Munger, they've certainly set that bar very high, and we have high expectations every quarter. But I think a lot of things went very well this quarter. Operating income was up. They were able to grow book value. If you look at net written premiums altogether, I mean, their insurance premiums were down a little bit, but Geico really brought home the bacon. They're more than double their premium. So, I think that all in all, Berkshire has such a diverse mix of businesses and has such a great culture in place that even at today's valuation of 1.4 plus times book value, it's still worth a look.
Revlon up after announcing plans to buy Color Group for $660 million in cash, giving Revlon an opportunity for more international sales. Shares at a 5-year high. It seems like the market likes this deal.
Well, they do like this deal, and I guess they should, because it gets Revlon into some new distribution channels, especially overseas in Europe. However, Revlon's a $1.5 billion company. This is a $600 million acquisition that they're going to have to borrow to pay it off, and I don't like those kind of deals, so I'm staying away from the stock.
Tyson Foods hitting a new all-time high after strong third quarter results. The company beat on the top and bottom lines thanks to strong demand for chicken and beef. Is the stock getting a little pricey, or is this looking good?
I tend to avoid buying stocks on pops like today. Now, with that said, I mean, Tyson certainly had a very good quarter. They reiterated guidance, which is always received well, and when you beat expectations and reiterate guidance, you have what you have today. But, I mean, volumes are up in chicken and beef. That was helpful in offsetting a little bit of a slower segment in the pork. But all in all, I think Tyson has a great market share position. Let this euphoria wear off a couple of days. It's probably worth a look.
FOSL Group reports earnings Tuesday morning, but at least one analyst is not waiting for the results. Shares down after Barclays downgraded the stock and reduce the price target. What do you think?
They may know something that I don't know.
What should we expect?
I think, listen, FOSL is a really high quality operator in a kind of fickle space. So I think any kind of pullback, I'm looking to buy shares into this stock. We own this in Hidden Gems, and we like it. We still like it for the long term. You're going to see volatility like this, even quarter to quarter. So I think if you can take advantage of that for a good high quality company like FOSL, take a shot at it.
All right, that's going to do it for Monday. Let's look ahead to the rest of the week. Jason, what's the stock you got on your radar?
Well, Chris, my zestimate for tomorrow is that there may be some trouble for Zillow in the foreseeable future. And it's not because I have a problem with the company. I just think that this is a story where the stock price is a little bit detached from the fundamentals of the business. They're doing a great job of really developing that brand. It's the place where you go on your iPad or whatever tablet to find whatever you want on real estate. You got to pay attention to growth in subscribers and revenue per subscriber. But it's going to be an interesting one tomorrow for sure.
All right, Andy, what about you?
Michael Kors has been a thorn in Coach's side here recently, and they've really done very well. They've grown their comps for the last few months, last few quarters by more than 30%. That's a pretty amazing. The stock has really run nicely on this. If we start to see some slow growth here, you're going to see the stock get hit pretty heavily. But I really want to see how are their comp sales growing and how are all of their lines, especially some of their new offerings that have competed very well with Coach. Are they continuing to make inroads? Because I want to see how this is impacting Coach's future.
All right, for Andy Cross and Jason Moser, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal